What a day for gold and silver. Both metals got hammered almost equally. We'll discuss the official reasons why and speculate on some very suspicious activity in the markets as we explore. For those of you who've been following this channel for any length of time, you know that I like to look at opposition. I like to take the opposing point of view a lot of times. I like to challenge myself and my conventional way of thinking, and also the conventional thinking among this community. Notwithstanding, there's been a lot of activity in the markets that have been suspicious, and we're going to get into that in a moment. But first, we're going to talk about one of the official reasons why gold and silver prices fell equally today. It was quite a bloodbath for any given day. Now, again, some will say, well, it's only a 2% move, 2.2% move for both metals. That's not that much. In the grand scheme of things, that's right. But in a 24-hour period, this is a pretty big move. And by the way, there are some people that watch this video after the Asian markets open back up again, and everything is reset there because that's when the day begins in trading. There's only a couple hours where there's no trading anywhere in the world. But nonetheless, dips like what we're seeing today provides an opportunity that I'm not able to take advantage of. You see, there's a time to buy and a time not to buy, and I cannot buy right now. If I could, I would consider adding another one of these gram bars to my little Summit Metals or Precious Metals wallet here. You can check them out. They're the only bullion company that provides a service like this to be able to actually have a way to be able to stack these little gram bars and fill them up. They also have 10th ounce wallets. They've got quarter ounce and half ounce wallets as well. So it's a really neat thing that Summit Metals is doing over there. Check them out at summitmetals.com. They have several different services that they have added and more selection now than they've had before. One of the fastest growing bullion dealers out there. So what's going on with the market today? Well, gold prices have dropped more than 2% on Wednesday, hitting an over 1 month low as rising trade optimism boosted risk appetite, leading investors to shift away from bullion. And then we had the deal struck in Qatar with Boeing that would be a game changer, I think, for an American company, which has been very slow to actually to build the two Air Force One planes. Actually, they're not Air Force One until the president is on them, but the planes that would serve as Air Force One. Spot gold has slipped to its lowest since April the 11th, and that shed right now 2.2% right now as I record this video moments before the markets close. Gold has dipped down $71.40 with a 2.2% drop to $3,179.80. Wow, gold is cheap. Actually, if you would have heard me say that a couple of months ago or last year, you would have think I was crazy. But here we are for almost $3,500 an ounce. Now it's down to $31.79.80. Silver took a slightly bigger hit today, down 2.25%. Down 74 cents today to $32.26, below that critical $32.50 level, and below yesterday's above $33 mark. Here we were celebrating what was happening yesterday with silver recapturing $33. All that is wiped away today. Platinum and palladium were not immune from the destruction that gold and silver saw. They were down, but not by as much. So the U.S. gold futures settled now to 1.8% lower to 31.88. The global relief rally sparked by the steep reduction in U.S.-China tariffs has triggered a correction through technical levels in gold, according to Tai Wang, who is an independent metals trader. Wall Street's main indexes opened higher, driven by the tariff deal and expectations of more trade agreements to come. Washington and Beijing agreed to reduce tariffs on Tuesday of this week, and he could see himself dealing directly with Chinese President Xi Jinping with a trade pact in an interview that was conducted with Donald Trump. And he also said that potential deals with India, Japan, and South Korea were in the works. So the markets are reacting to that. In fact, the dollar index indeed has moved up to over 101 right now, 0.14%. And so Dow Jones Industrial Average, believe it or not, is actually down a little bit, with the NASDAQ up, and the S&P 500 is up slightly as well too. But that's pretty interesting to see. And crude oil has also dropped back 1.3% as well. And so I think a lot of this is deal struck. And with the Saudi Arabia, Qatar, business deals, and presumably some trade talks are happening there as well. It's pretty exciting. And while the long-term trend is still bullish, I wouldn't be surprised if the bearish momentum continued for a few more days, according to Fawad Razakzada, market analyst at City Index and Forex.com. The first downside target is $3,136, followed by $3,073. And then back to the big psychological number of $3,000 per ounce. Traders now await the U.S. Producer Price Index data, which is due out Thursday of this week. That's tomorrow, after softer than expected consumer data for cues on what the Federal Reserve's policy path will be. Lower interest rates increase bullion's appeal, as it is a zero-yielding asset. And but I think that even with strong economic conditions, if we get more economic and trade news, that is going to squash any potential for a price increase for gold. There's so much propping gold right now. It seems like interest rate cuts are going to have a muted effect, in my opinion, on gold. But however, it is also admittedly sort of wishful thinking, because I like to buy more gold at lower prices. But also just look at where we're at. Gold really is one of those metals that has continued to have done so well. Many people were cautious about it reaching above $3,000 an ounce, and here we are, still above $3,000 an ounce. And silver falling as well too, pretty much in tandem with gold right now, tells us something, that they are trading pretty much right along each other. But to a degree, usually when gold falls, silver falls even more. So we can declare a very, very tiny victory for silver, and that it is pretty much trading along with gold right now. So it's very interesting to see. Now, what will tomorrow hold? I don't know. But if we see more trade deals come together and an extended pause like we're seeing with China, that is going to put pressure on the metals. Although, if we see cemented deals, especially with goods and services coming in, I think silver very well could start to tick back the other way, narrowing that gold to silver ratio even further. Right now, the gold to silver ratio is still below 99. It's at 98.91, but it has increased a bit, with silver falling a little bit more than gold has right now. But boy, what a day it has been. Now, here's the suspicious thing. Activity. Looking at the charts for gold through what happened, we saw it spike up dramatically with a lot of volume earlier, and we saw that with silver yesterday. Massive spike in a very, very short amount of time, looking back through the course of the day. But there was a pretty big slam drop down for gold right before the open. And that's typically what happens, is right before the open of the New York markets, where there's a massive drop and a very huge volume of trading that we saw. And silver, much the same situation, right? But even sharper. In fact, it was such a sharp drop for silver right before the opened. We're talking about 8 o'clock, 8:14, massive drop. And many people feel that is the big bullion banks buying up or selling their futures, unloading those futures accounts, and then it's just dropped dramatically with a huge amount of volume hitting in before being slammed back down. Now, much like we saw yesterday, and I think it was Bald Guy Money that pointed this out, there's massive increase as well in trading, and it spiked right back up, and we saw that earlier in the day too. In fact, right around 9:14, an hour later, it was not as much of but there was a spike to the upside. And then on other periods of little spikes of volume with a massive drop and then a massive uptick in price. That's a little bit suspicious, is it not? Now, can it be explained by automatic triggers to sell and buy triggers at certain times, and everybody's kind of setting their triggers at a certain call, and then boom, it happens? I don't know. High frequency trading algorithms, and you set things to do at a certain thing, or if you see the volume reach a certain level, you go in with yours as well. I don't know how that stuff can be programmed, but it's quite possible that is what's going on. Based off of individual hedge fund manager accounts, and even the big bullion banks are doing it along, and it may be perfectly above board and legal. I just don't know, but it is suspicious. And so if you have any ideas of how this is legal and how this works, put it in the comment section below. I want to be as open-minded as possible with this type of thing. I don't want to rule one thing or another out in that regard. But nonetheless, here we are. We're sitting here today with the prices down. Like I said, a good buying opportunity if you are in the market to buy. I'm not. There's a time to buy and a time not to buy, and I'm not buying right now. Let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.